My investment portfolio is composed of just 2 ETFs. For those of you who aren't familiar, an ETF is just a collection of various stocks. So instead of investing in individual stocks, I'm investing in a group of them. The first ETF I invest in is VGT. VGT is Vanguard's Information Technology ETF. This ETF focuses specifically on technology companies. We're talking about big tech giants like Apple and Microsoft. The reason I love this ETF is because I believe tech is the backbone of the modern economy, and it's one of the fastest growing sectors. If you look at the historical returns, the tech sector has absolutely crushed it over the last decade. VGT is up 28% year to date. Over the past 5 years, it returned 180%. And since 2004, when the fund was first established, it has returned 1100%. While past performance does not guarantee future results, it's still a good indication for the future. If we look at the holdings, we can see that Apple is 16%, Microsoft 13%, Nvidia is 13%, Broadcom is 4%, and there are hundreds of other technology stocks. VGT holds 315 different tech stocks. The reason why I like it is because it gives me concentrated exposure to the high growth area, but at the same time, the fund is diversified across dozens of top tech companies. That way, I don't have to try and pick individual stocks, which can be quite risky. VGT also has a low expense ratio, only 0.1%, much lower than say a QQQ fund. That's why I'm a big fan of it and Vanguard in general. Their ETFs have very low fees. Another thing is that VGT doesn't distribute a lot of dividends. The dividend yield is only around 0.6%, so it makes it a very efficient fund to hold from the tax standpoint. I also hold VGT not just in my brokerage account, but also in my Roth IRA. Since Roth IRA is a tax-free account, I want to have as much growth as possible in it, and VGT is a great choice for that. The second ETF I hold is VTI, the Vanguard Total Market ETF. This is one of the broadest ETFs you can invest in. It literally covers the entire US stock market. With over 3,000 companies in this ETF, it includes everything from small startups to giant corporations across every sector. This gives me exposure to not just tech, but healthcare, finance, consumer goods, and more. By investing in VTI, I get a piece of every major US company's growth. One thing I want to point out is that the top holdings of VTI are also Apple, Microsoft, and Nvidia, just like VGT, only in smaller proportions. This makes this portfolio tech concentrated. But since I'm relatively young, I can take on more risk, and I believe tech is well positioned for future growth long term. My personal allocation is about 50% in VGT and 50% in VTI. This gives me a good balance between growth and diversification. Now, you could adjust these based on your risk balance, age, and preferences, but this split has worked well for me. In 2023, I sold all of my stocks and made the switch to these 2 ETFs, and it paid off. One of my brokerage accounts made me $34,000 since I bought them, so the performance has been really good. If you had invested $10,000 into this portfolio on January 1st of 2020, you would have roughly $21,000 now, beating the S&P 500 by roughly 13%. Now, why just 2 ETFs? First, it's simple. I don't need to track, manage, or research different stocks. VGT gives me exposure to high growth tech companies, while VTI provides broad diversification. I don't really need to add any other ETFs. Between VGT and VTI, I'm already covered for most of the stock market. Adding more ETFs would just add more complexity without significantly improving my returns. You might also notice that with these 2 ETFs, I'm heavily exposed to the US market. And that's okay for me. As someone who immigrated from another country, I'm a big believer in the US efficiency and the economy and want to avoid the currency and country risk related to international markets. In the end, what matters is that you keep investing consistently in whatever ETFs you choose. And remember, simplicity often leads to success in investing. The fewer moving parts there are, the less there is to manage, pay fees or taxes, and the more likely you'll stick with the strategy long term. My investing style is boring, but it gets the job done and makes me money. If you enjoyed this video, make sure to hit that like button and subscribe. I'm almost at 500 subscribers, so would really appreciate your support.